Now we're going to take a look at posting. Okay, so posting is a process of copying the transactions from the general journal into individual general ledger accounts. So you have a general ledger account for each account similar to the T accounts. So I have cash, accounts receivable. These are what my general ledger accounts look like. And like I said, it is similar to a T account. The only difference between the general ledger and the T account is this ongoing balance calculation. Because remember, on a T account, we would foot and balance. And on the ledger accounts, we calculate our balance after every item that we post to the account. So you still have, if I were to draw a line right here, I would have my T account and I would post my debit or credit depending on the transaction. But now I'll calculate my balance after each transaction. So what we have here, we have the two general ledgers, or I'm sorry, general journal transactions that we created in the previous example, and now we're going to post them to the ledger accounts. So the posting process, first we're going to do September 6th, we debited accounts receivable for $3,800, so we're going to go find our accounts receivable account and we're going to debit it for the $3,800. So like I said, it's just copying whatever you did here and putting it into the ledger account. So we'll go find our accounts receivable account. It's right here, September 6th. I don't put anything in the item column at this point, but I debited this account for $3,800, so I'm going to do that now. And then I'm going to calculate my new balance. So there's nothing in my balance right now, so I have a zero balance. So 0 plus my $3,800 gives me a $3,800 debit. So this is an example where you have to also know how accounts increase or decrease. Accounts receivables increases with a debit and decreases with a credit. So anytime I debit this account, I'm going to add it to my new balance over here, and anytime I credit the account, I'm going to subtract it. But as for the balance, we also have to keep in mind that accounts receivable has a normal debit balance. So this balance should always remain on the debit side. If we had a pencil, we could just cross out this credit side right now to help us remember that the balance will always be on the debit side. And then you'll notice in my post-reference column I put J4. That stands for Journal 4. So if I scroll up here, General Journal, page 4. So that references me back. If I ever need to go find this transaction, I can go to the General Journal, page 4. Then the last part is I take my account number 113 and I post it in the post-reference column up here, and I would put 113 in here. Okay. So then credited service revenue for $3,800. So I need to go find my service revenue account. And nothing goes in the item column. I credited for $3,800, so I'll type that in here. So my new balance is a credit of $3,800. So service revenue, you're never going to have a balance in your debit column. I add credits and subtract debits to my credit balance. So then my J4 is my post reference, and if we could continue posting, we would take 411 and put it back in the post reference column, but it's not letting us. Then I debited cash for $1,800, so here's my cash account. I put my date, nothing goes in the item column. It's from journal page 4, debit cash, $1,800. So my new balance is $1,800. So this is another example. If you continue to post, see, this is going to let you put something in the credit column, but you don't want to. There will never, if I could just draw an X right here, there'll never be a balance on the credit side of my cash account. Then I'm going to credit accounts receivable for $1,800. So I come down here on the 16th, credit accounts receivable for $1,800. So this is where you will see how the ongoing balance is done. I'm not going to go put $1,800 over here. I have to calculate my new balance. I'm starting with $3,800. I add debits and subtract credits because accounts receivable increases with a debit and decreases with a credit. So I'm going to take $3,800 minus this $1,800, and my new balance, the amount that the customer now owes me, is $2,000 because they owed me $3,800 and they paid me the $1,800. Okay, so that's the last transaction. So now instead of foot and balancing, all these accounts have the balances that they're supposed to have. And now we need to prepare a trial balance. So trial balance, we take our accounts and we list them in order. This is where you have to remember assets first, liabilities second, capital, drawing, revenues, and expenses. So let's see, what assets do I have? I have cash and I have accounts receivable. And you'll also know that they're an asset because all of our assets are going to start with a 1. Their account numbers are going to start with 1. So I have cash and I have accounts receivable, and this will also help you put them in order because they go in numerical order as well. So I'll put cash and accounts receivable. The balance of my cash account again is $1,800 and the balance of my accounts receivable is $2,000. So $1,800 and $2,000. And the only other account I have is my service revenue, and it has a balance of $3,800. So if I add up all my credits, $3,800, I add up all my debits, $3,800, my trial balance equals. So we'll check our work, make sure we haven't made any mistakes. Keep in mind you can use the ebook function to click and find the page in the book to help you with the posting process. It says everything's correct. And then it gives us some additional information about the posting process. This is a good example of what I was talking about of calculating the ongoing balances. Accounts payable increases the credit, so your ongoing balance should be on its normal balance side as well. And then our trial balance is correct also.